I wanted to show you something today that I try to do for the majority of my clients. And what this is going to do is eliminate sequence of returns risk in retirement and give you a volatility buffer. So you're never depleting your assets in a down market from your 401k that's invested in the market. And so what I'm going to do is I'm going to share my screen and try to explain this to you. So in retirement, the traditional model is what you see over here on the left, which is a 60-40 model. And what that means is 60% of your money's in stocks and 40% of your money's in fixed income or bonds. That's traditionally what the average investor does. And that's going to reduce volatility and also lower your standard deviation or risk in your portfolio. So you can still draw income in a down market. The problem is, like we saw in 2022, there's no guarantees with bonds that they're going to go up when stocks are down. They're not necessarily negatively correlated. So in 2022, what we saw with interest rates going sky high, that fixed income portion of your portfolio or those bonds were going way down. And so that could have blown up your whole portfolio if you had retired in 2022 and needed all that income. So what we're going to do is we're going to create something that's never going to be an issue, where we can take sequence of returns risk off the table because we're never going to be taking income from the stock portion of your portfolio in retirement during a down market. And what I like to call this is my retirement jet engine. And what I want you to do, or your goal before retirement, is to have 20 to 25% of what I like to call safe money. So if this is all your 401k or all your assets, this 25% that would normally go to the fixed income portion, I want you to think of this safe as your fixed income portion of your portfolio. And now we have a fixed income portion that never, ever loses value by a contract. It's guaranteed tax-free growth. It's liquid. When you borrow against it, it's tax-free withdrawals, totally protected from the government, and it has uninterrupted compounding interest. So if you're going to earn 4 to 6% tax-free and it'll never go down, that is uninterrupted compounding interest. And the way this is going to work, because you have this safe money, the other 75% of your 401k or other assets, we can leave the throttles way up on that. We can still be aggressive. If the market's good, we'll be able to take your income out of the 75% that's still aggressive, and we'll produce your monthly income from there. However, if we had a year like 2022 or any other year that the market's down, what we're going to do is we're going to take your income from the retirement jet engine or the safe, and that's how you're going to get income. So we're not depleting the 75% in a down market. We'll allow this to recover, and when it recovers, then we'll backfill money back to the safe and repay our safe money bank. And by doing this, what happens is now we don't have to abide by this 4% safe money withdrawal rate. And why is that? We're not having to liquidate as many things in a down market like we normally would have. When you have this set up, this retirement jet engine, your safe withdrawal rate is more like 9%. And I'm sure many of you guys are asking, well, how can I do this? Well, what we do is with something called a LIRP, a life insurance retirement plan, or what I like to call it, or we use an insurance contract to make guarantees for that fixed income portion of our portfolio. Doing that with guarantees, we allow the standard deviation to plummet, and our risk is much, much less than it would be otherwise. The other added benefit, if you have 20 to 25% of all your assets in an insurance contract, your family has a massive tax-free death benefit when you decide to retire from this earth. So in many cases, a 50% survivor benefit, whether it's military or a pension that you still have at some airlines, you do not have to take that. You don't have to throw away 20 grand a year to get that survivor benefit. By building this, it's already inherent in there, and you have that safe money asset to pull from. If you guys have any questions about this, feel free to reach out. I'll be sending you some more videos and podcasts on this strategy. But what I can tell you is this strategy is very, very efficient. And if I can get somebody to build this out prior to retirement, it makes things much easier.